Okay, that's chapter 3. On chapter 3, I'm going to spend time on the cost behavior, and we're going to look at those costs a little bit closely. As we said from the previous chapter, the costs behave two ways, as a variable and as a fixed cost. Now, in total, we're going to measure the cost in total, and we're going to measure the cost per unit. Variable cost, as we said before, total variable cost always grows proportionally to the level of activity within the relevant range. What that means? That means is if we use it, we have to pay for it. If we don't use it, we don't have to pay for it. More we use it, more we have to pay. Less we use it, less we have to pay. What drives the cost then? Again, units produced. More production, more material, more labor, more manufacturing overhead, more cost. More machine hours used, more electricity, more depreciation, more cost. Labor hours. More hours the people work for us, more we have to pay them. Miles that are driven. More miles you drive in your car, more you have to pay. So the true variable cost always grows with the level of usage. Start with 0 and keep going up. More you're using, more you have to pay. The increase is proportional to the change of the level of activity. Per unit, variable cost per unit always stays the same. What that means? That means that if we have to buy potato and the pound per potato is $1, regardless how many pounds we're going to buy, the price is going to stay per unit the same. Always $1. We're not buying potato, $1 per pound. 2 pounds potato we buying, $1 per pound. 10 pounds potato we buying, $1 per pound. So what's the extent of the variable cost? Well, different organizations using different kind of costs between the variable and fixed. Those are the only two options here. Once we're talking about how the costs behave, we only split in the variable and fixed. Later on, we see there's one more in the middle, but for the decision making, we're going to talk next time. We're going to split it only purely variable and fixed cost. That's it. So let's see which company, which organization, what kind of cost we're going to have. What's the proportion of the variable cost that's going to have? Public utility with large investments in equipment, those facilities we're going to have a fewer variable cost. Let's think for a moment, is that actually true? Let's think of let's say we are Toyota manufacturer. With Toyota manufacturer, we have to produce the new model of RAV4 hybrid. What are we going to do in order to reduce the cost, to be efficient? Well, we're going to build a facility which is fully equipped with all those robots that doing all the manufacturing of the car, very minimum labor. So we're going to have this large investment in the beginning, and after that, we don't need humans anymore. We can use that artificial intelligence now. We're going to put all the robots to do the assembly, and on one side we just have to provide the materials. On the other side, we're going to get the cars. Do we need variable cost? Not really. What do we need that variable cost for? Do we need electricity? No. For the robots, doesn't matter, is it dark or is it light? Is it day? Is it night? What is it? They don't care. They're just producing. They don't getting sick. They don't getting tired. They're not taking vacation days. So our variable cost is very few portion. Service company, on the other hand, well, those service companies, they're going to have a high portion of the variable cost. Because for different companies, we have to provide a different services which are more adjusted to that particular company. Merchandising company, high proportion of variable cost. Why? Because we're buying different things. Remember, in the merchandising company, you have to buy the goods, finished goods, in order to sell it. So if you stay only with one good, buying and selling, your opportunities are very limited. So you want to expand the variety of the products that you're selling. Manufacturing company, they also have a many variable cost. That would be direct material is the variable cost, direct labor may be variable cost, a manufacturing overhead is going to be variable cost, selling administrative expenses, definitely sales expenses are variable costs, as we're going to see later. So for that reason, those companies, service, merchandising, manufacturing have a many variable costs. Based on the type of organization and examples, the variable cost now, for the merchandising company, cost of goods sold are definitely variable cost. For the manufacturing company, we're going to have direct material, and we're going to have the variable portion of the manufacturing overhead, indirect material, power. Both merchandising manufacturing company, we have selling and general administrative costs. Sales commissions is definitely a variable cost. More the salesperson selling, more he's going to get the commission. Billing on the shipping cost, more we ship, more costs we're going to have. For the service organization, we're going to have supplies, we're going to have travel, we're going to have clerical. Right. So the true variable cost is the direct material. It's a true variable cost. Means the proportionally increase with increasing the level of production. Sometimes we may have a step variable cost, which will be obtained only with the large chunks, such as some maintenance workers. So if I have one maintenance worker, my cost will be variable to some extent, but it's going to stay on that step. If I have to hire another person, then also is going to be variable, but for two people now, based on how much they're working. So the step variable cost is like on the small portion of the range, is going to change. It's going to step on the next level and the next level and the next level. Means the small level of production will not likely to have any effect on the numbers of those maintenance workers. So basically, if I'm let's pretend that let's make it simple so you can understand it. You have that cleaning person in the office when there are 10 people working. That cleaning person usually takes him 2 hours to finish everything. Now, the cleaning company is sending that person after work, and the job has to be done between 8 o'clock and 9 o'clock. But if the office, people in the office decide to expand, and instead of 10 people, have now 20 people in the office, I have to hire and send to that location a second maid cleaning person in order to finish the same job for 1 hour. Make sense? That's how I'm moving from one variable to a next variable cost, because now I'm sending 2 people. It's still variable because based on the hours that those 2 workers spending, but now I have to pay double. So that's how the cost, the step variable cost, went to the next level. Now, how we gonna understand the cost? Obviously, the cost starts with 0, variable cost, pure variable cost starts with 0. In the beginning, we're gonna see a slight increase, and then gonna be kind of stable, and then gonna go up again. What we're trying to find out is what's the relevant range. Why do we need the relevant range? Relevant range we needed in order to understand the cost and try to predict the cost. The relevant range will be the range that the variable cost behave as a variable cost. We're going to increase proportionally with the level of usage. Of course, we're going to use approximation in order to make it more easy for us to understand that. Fixed cost. As I said before, fixed cost in total stays the same with the level of activity and within the relevant range. What that means to you? Means that once you pay it, you don't have to worry about it. Simple example will be your Compass card. I know from the previous group from yesterday, choose on card is $140. Now the question is, how many times you're going to use it? So once you pay the Compass card monthly fee, that's it. You don't have to pay again and again and again. You have to pay next month, but that's for the whole month. Now the question is, can you utilize that cost? Can you make that cost to work for you in terms of to use the cost to the maximum extent in order you to reduce the cost per unit? Because variable cost per unit, fixed cost per unit always gonna goes down as long as you're using it. So more you're riding the SkyTrain, less the cost per ride is gonna go. What's your objective? Objective is this, very simple. It's very simple calculation. If I pay $140 per monthly choose on ticket, and I already know that the choose on pass for for one trip is $4.10, I need to use my Compass card 35 times in order to make sense for me to pay the monthly pass. If I'm riding the SkyTrain only 33 times, I'm paying more with buying a monthly pass. So question for you, if happened that you pay monthly pass for $140, but you're actually using the SkyTrain with the trips that you're making during the month, you're making 33 trips. In other words, your cost is not 140, it's less than 140, let's say 135. Are you going to purchase next month, if everything stays the same, next month, are you going to purchase monthly pass again? What do you say? No, absolutely no. It doesn't make sense. Yes, $5, $5, but $5 in your pocket now, not in the TransLink. Make sense? They make enough money. Let them make their money. Worry about your pocket. So if you run this calculation, please, every each of you, see how many trips you have per month and calculate, is it make sense for me to pay monthly pass? Because if you paying $5 more, it just doesn't make sense. In other words, if you end up with $5 paying more, then make sure that next month you're using the SkyTrain enough to cover your monthly pass. If you use it more, then the cost per trip is gonna go down. What's your incentive? To make it every trip to cost you less than $2 or $3, because when you're on the Saturday and Sunday, when you have the ozone or after 6:30, everything is one zone, at least to cover that cost. You to be below that cost. Make sense? The other thing that you can do is, obviously you're paying for cell phone, correct? Cell phones, and you have unlimited text messages. Imagine if you're paying $50 for the monthly for the monthly fee for the cell phone, and you send only one text message. How much is the cost for one text message? It's gonna be $50, correct? So the only way you to reduce that cost per text message is to text. So I strongly encourage you to text. Text as much as you can, because that's how you're going to reduce the cost per text message that you already paid. Make sense? But then, so then we have to think of something else. How about the cost for the course? What kind of cost is that? Is it variable cost or fixed cost?
Variable, maybe, because the more course I do, the
Yes,
more
but once you
tuition
start
I.
the course, the question is, once you start the course, do you have to pay again? No. So what kind of cost is this? It's a fixed cost, correct? So if you pay attention in class, 1 minute, how much that minute's gonna cost you? A lot, correct? So what's your incentive? In order to you to reduce the cost, you have to be more efficient. In terms, you have to pay more attention in class. That's the only way you can reduce the cost per minute for the course, correct? But now we have a dilemma. What should I do in the classroom? Should I pay attention or should I text? Because I already know more I'm texting, more corporate cost per text message gonna go down. But now I have, and the other thing is, more I pay attention in the classroom, less my cost per minute is gonna go for the course. So how can I make that decision? Well, we say very simple. If you come up with the calculation that the cost per minute, pay attention in the classroom, is cheaper than texting cost per text, one text message, then yes, text. But if you come up with the other conclusion that the cost per paying attention in the classroom is more expensive than texting, then I'm going to ask you what kind of manager you are and why you're wasting your money. Let's move to the next one. Type of the fixed cost. We have two types of fixed cost. One is committed, the other one is discretionary. Committed fixed cost is the long term, which cannot be significantly reduced. Sometimes you cannot even eliminate it. That's why it's committed. Commitment usually is made in a contract and you already signed the contract. Example for committed cost will be your cell phone. Yes, it's for term for 2 years. And yes, you can cancel it, but there's a always catch. If you decide to cancel it, you have to pay the balance until the end of the contract. So basically, there's no difference how you're going to pay it. Are you going to pay it at once or are you going to pay it over the 2 years? You're paying the same amount. So that's a committed cost. Discretionary cost, on the other hand, will be your cell phone after the 2-year contract. Now you're using it, you're paying the same amount, but there's no obligation for you to keep paying it. So every time when you don't need it, you just cut the cost. Make sense? You have to understand what kind of fixed cost you have in the company and your household. Why? Because apparently 95% of the whole professional players in North America, they don't know what kind of fixed cost they have. That's why in the average between 3 to 5 years after they stop playing, they're going bankrupt. Why? Because during the time when they're active athletes, they they already equipped themselves with so many committed costs, which after they stop playing and losing that huge income, they cannot eliminate. Why? Because they have a long-term commitment now. And usually take them 3 to 5 years to drain all their savings. The other thing that you should look at these slides particularly is every time, if it happens in every personal life happen, you to lose your job. First thing that you have to do is to sit down on the table instead of crying and thinking that how life is bad and everything, all the bad things happen to you. You can sit down on the table, focus, and figure out what kind of costs you have right now. Which one are the variable, which one are the fixed cost. From the fixed cost, which are the committed cost, which are discretionary cost. See with which cost you cannot live. Keep that cost on the variable cost. Everything that you don't need at the moment, eliminate in the variable cost. Same thing that you have to do with the fixed cost. Check which one are committed, which one is discretionary. From the committed, just revise them and see, is there anything you can do? If there's nothing you can do, that it's a cost. But on the discretionary, eliminate as much as you can. That's going to make a huge difference. But you have to do it at the moment that you're losing your job. Not after 1 month. 1 month is already too late. That's going to make the difference between living with your savings 3 months or living with your saving only 1 month. The trend in the cost is cost to move from the variable into the fixed. Example will be, imagine you have this international students that you're working for your company, and you hire him on the hourly rate. And you find out that this student is actually very efficient and very valuable employee. Do you want to lose that employee? Obviously, you don't. So what you're gonna do? Instead of paying him hourly based on the hours that he's working, you're gonna get him on the contract. So you're gonna move him to salary. Once you move him to salary, you're committing to him on the long term. Yes, he become a committed cost for you, but you lock that employee in your company for the long period of time to take advantage of the fact that he's better than everybody else. The other example will be driving a car. Cost of the gas is technically variable cost, correct? More you're driving, more you have to pay. Less you're driving, less you have to pay. If you don't drive the car, you don't have to pay for the gas. But you found a job. You found a job for which job you have to drive every day 50 kilometers from your place to the job and 50 for the office and 50 kilometers back. So that means 100 kilometers every single day. Obviously, you're not going to work in this job 1 month and then move it to the next one. So you're working on this job 5 years. Now, what kind of cost is that for you? If you have to drive every single day for 5 years, 100 kilometers every single day, what kind of cost is that now? Now it's fixed cost. So you can see how the variable cost tend in the long run to move into the fixed cost. The other example, simple example will be this. Grocery, what kind of cost is that? Looks like a variable. It's a variable cost, right? More you buying, more you have to pay. Less you buying, less you have to pay. Variable cost, no questions about it. But do you need to buy grocery?
Yes, I have to.
You have to. Can you stop buying grocery? It will be nice, right? It's going to be very good for your look. But we cannot eliminate it. So even though the grocery looks like a variable cost, on the long run, since we cannot eliminate it, looks like a fixed cost. You can vary with that cost, but not too much extent. Relevant cost and fixed cost, sorry, and relevant range. One thing I have to understand is usually on the fixed cost, when you're moving from one relevant range to another relevant range, the fixed cost jumps higher, pretty much double. Let's see one example of the relevant range of fixed cost. Rent is fixed cost. We already agree, rent is pure fixed cost. If you're renting one bedroom, you are in one relevant range. But at some point, when you meet your significant one and decide to multiply, you have to move to the next relevant range. What's the next relevant range? 2-bedroom. And you already know that on the 2-bedroom, you're going on the completely different cost. It's not like the cost for the 1-bedroom. The cost jumps dramatically. Once you move to the 3-bedroom, the cost jumps even higher. Same thing happened with the compass card. If you're having compass card from one zone, one relevant range. When you move to the second 2 zones, next relevant range. Now combine those together. Imagine this. In order you to save on the cost, let's say you study in Douglas College and your work is in New Westminster. So what you're going to do? You're going to try to stay in the same area. Why? Because that's going to save the cost. You don't have to commit too much on the cost. But let's get a different example. Let's pretend that your school is in downtown, and obviously your apartment is in downtown. You're going to try to look that. But in downtown, the relevant range for 1-bedroom is different than that range, let's say in Surrey. So you can lower a cost for the rent by moving on remote location from downtown, but you're going to increase the cost for commute. Make sense? So you see how the cost kind of work together against you. You want to save on the rent, moving away from downtown, but at the same time, you're increasing the cost for commute by not living close to where you study or where you work. That's
And
interesting. Sorry?
and that would be relevant range, an example of relevant range, like when you like go to like a lower income house where basically it's a longer commute, that's relevant range or something along those
No,
lines.
that will be different. A relevant range will be based on the one bedroom versus two bedroom, purely.
Oh, okay. Thank
And
you.
relevant range will be, let's say, one zone compass cut versus two zone compass cut. That will be relevant range. But if we're looking for the rent within certain area compared to the rent in the other area, yeah, you can kind of work with the and call it a relevant range because you're staying in the same reality. Make sense? As long as you stay comparing the same reality, you can see the different ranges for the same thing. Now, relevant range of activity. Now, let's move to the relevant range of activity. Relevant range of activity is the range on the activity over which the graph of the cost is flat. So as long as the office space stays the same, let's say, for one bedroom, that will be our range. If the rent jumps, now we're moving to the next relevant range. Which of the following statements about the cost behavior are true? Let's see which one is true, which one is not true. Fixed cost per unit vary with the level of activity. Is that true? Think about it before you jump. Variable cost per unit. More I'm using it, less the cost per unit is. Less I'm using it, higher cost per unit is. So one bedroom apartment, think about it. One bedroom apartment paying $1,000. If one person living there, $1,000 per person. Two people, I reduce cost. Now it's 500 per person. Four people, 250. So fixed cost per unit, is it vary? Yes, it does. So that's true. Variable cost per unit are constant within the relevant range. Is that true? Cost of the potato. I'm not buying it, $1. I'm buying 10 pounds, $1. I'm buying 20 pounds, $1. Is it true? It is true. Total fixed costs are constant within the relevant range. If I'm staying on one bedroom apartment, I'm paying that range. It's true. Total variable costs are constant within the relevant range. Is that true? That's the false statement. Because the total variable cost always increase in relation to the usage or activity. So let's see one new cost, which is mixed cost. Mixed cost is combination of both. Mixed cost has a fixed cost and variable cost all together. Perfect example for the mixed cost will be your cell phone with 1 gigabyte usage. So if you have if you're paying for the $50 for the cell phone with 1 gigabyte usage, that's perfect example of mixed cost. Why? Because you're paying $50 and once you reach 1 gigabyte, for every additional data that you're using, you have to pay more. And that's where the variable portion of the cost start influence the cost. In this case, we can draw the line and we can draw the formula that the total cost is always equal to the total fixed cost plus total variable cost. But the variable cost, total variable cost, is equal to the number of the units that you're using time cost of the unit. So the question is, if the fixed monthly utility charges are $40, your variable cost is 3 cents per kilowatt, your monthly activity is 2000 kilowatt hours, what's the amount of the utility bill that you have to pay? Well, the total cost will be obviously the fixed cost, $40, plus the variable cost. In the variable cost, you have the usage of 2000 kilowatts, 3 cents per kilowatt, that's $60, total is $100. How are we going to analyze this mixed cost? We have two approaches. First one is the accounting analysis, and we can do engineering approach. In the accounting analysis, we're going to go over single account. We're going to try to classify it either as a variable, either as a fixed. On the engineering approach, we're going to go to the production, and we're going to start evaluating production, material, labor, overhead, and see how those behave. Why do we need this? Why do we need to come up with the formulas? Why do we need to understand the cost? Why do we need to spend so much time of talking about how the costs behave? There's only one reason. We need to beat ChatGPT. That's the only reason. What that means, we need to start predicting the future. Based on what? Based on the past experience and formula from the past experience. So we already draw some kind of, we found the pattern based on the past experience. Once we find this pattern, now we can use it to predict the future. That's why we need this formula here, that the total cost is equal to the fixed cost plus number of units and cost per unit, which is represent the total variable cost. That's the whole purpose of talking about the costs and thinking about the costs, how the costs behave, which one is what is what, in order we to predict the future and we to be able to change our lives in better way, saving from something. Because you have to understand the income or the savings in your bank account is not going to come always from the higher income that you're getting. It's going to come from the lowering your costs or expenses and controlling your expenses by understanding what expenses, what kind of expenses this. Is it a variable cost? Is it a fixed cost? Is there anything I can do about it? And what will be my cost next month? So one way to predict the cost is this scatter plot. On the scatter plot, not examinable. Don't get scared here. This plot, this way to predict the cost is not examinable. Just telling you for your information. I'm not even going to spend time on the slides here. You basically you're checking the actual cost. Then you're trying to draw a line, which line later can be expressed with the formula. And based on that formula, you're trying to predict the future. Next method is high-low method. This method, I want you to know it because this one is examinable. So what I'm going to do is from here, I'm going to flip to Excel spreadsheet. I already copied this chart. We're going to flip to Excel spreadsheet. We're going to go over the Excel spreadsheet. And later on, we're going to come back to the slides. Let me open the Excel spreadsheet. I need a little formatting before I share it with you. I think I'm done. Let me share my screen again. Okay. I believe you can see my screen. So this is the question that we have, correct? You guys can see it, right?
Yeah.
Awesome, awesome. Now what we have January, then we have February, and let's not waste any more time, all the way to June. Those are our months. Then we have hours usage, and then we have the total cost. Those are the three columns that we have. I can easily plug on 625, 500, 700, 550, 775, 800. And then we have the total cost is 7950, 7400, 75, 7625, 9100, 9800. So now I have everything that I need, correct? I literally flip this one here. So now I have everything that I need. Total cost with the usage and everything. So how the high and low method works? It's very simple. As you can see, what we can do, we're gonna identify which is the highest point of usage, right? So we're gonna get the high point first. So what we're gonna chase? Equal to here, we're gonna get the function. If you want to use the formula, you can easily here on the formula go to statistical, get the maximum amount of all this range, and it's gonna give you the maximum amount $800. You don't even have to think about it, right? And the next one is to get the low level. On the low level, again, go to that statistical function, go to the minimum amount, which will be minimum, highlight the range, and it's going to give you the minimum amount. Boom, right away. The next thing that we have to do is to drag the cost for that level, right? Those are the hours of usage. Now, for the high level, we have to drag the exact amount of the cost related to that level. Obviously, this is the high level. Let's highlight it. This is the high level, and this is the low level. We already identified those levels. So now what we have to do, we have to bring the cost from that level. How are we going to bring it with the formula? Probably you already know that one, but let's see, vertical lookup. You just gotta go vertical lookup. What I'm gonna look for this value. Where I'm gonna look in this chart. And once I find it, I'm gonna drag the number from the second column. Otherwise, I'm gonna say false. And there you go, my cost is here. Magically, my cost is here. So what do I have to do in order this one to work further for the second cost? I just have to lock the range. And I'm done. So now I have to drag this formula, and it's gonna give me the total costs which are relevant for the lower level of activity. So I have this one. I already have them. I have the low and I have the high. So what I have to do now? I have to get the differences. What's the difference between low and high? The difference is this one minus that one as a cost, and the difference as a usage is 800 minus the 500, that's 300. Next thing that I have to do, I have to get the cost per usage, which is hours in this case, per hour in this case. How I'm going to get the cost per hour? Well, obviously the cost will be my nominator. The usage will be my denominator. So what I'm going to do, this cost divided by 300. So the cost per hour for me is $8. Okay, so far so good. Now,
Evan, I
yes,
have a question. So as you calculate the cost per hour is $8. So if we put it back to the June number for the highest number, that should be 6,400. Is it correct? For the cost. But it's different from the number we paid on the June actually.
what, why would be 600?
No, it's not 600. Because according to the difference calculate after the result should be cost per hour is $8. And on June we use hours for 800. If we put the cost for per hour back to June, the total cost for June on this
No,
form.
hold on a second. Before we go that, you're going too far. You're going too far. So far we get that cost per hour. Is there any confusion how we get, do you understand how I get this cost per hour here?
Yes, I got it. It's
I get the
calculated by
highest one
difference.
point, I getting the lowest point in usage. I'm getting the cost at the highest point and getting the cost at the lowest point. Getting the difference in the cost, getting the difference in the usage, and come up with the cost per hour. The question now is, what should I do with this cost per hour? Okay, I have a number. What should I do with it? Well, remember the formula. The formula for the total cost is the following. The total cost is equal to what? To the fixed cost plus variable cost, correct? But we already said the variable cost is equal to what? Number of the units time cost per unit, or variable cost per unit. Make sense?
Yeah, I got it.
So once we get that variable cost per unit, now we can apply it to this formula, right? So let's open the formula. Let's go one more step. And let's express this variable cost in the top formula. And what we're going to get? Let me make it here bigger so you can see it easy. So now we're going to have that our total cost is going to be equal to the fixed cost plus, in the brackets, number of the units time variable cost per unit, correct? Everybody with me here?
I'm somewhat with you. I'm just, yeah, I think I would need to rewatch the video in order to understand it a little bit more.
So watch this. We already know fixed cost plus the variable cost is going to be equal to total cost, correct?
Yeah, I understand that.
Right. So the question is, what's the variable cost? Fixed cost is fixed cost. Total fixed cost is always the same. It's a constant. Makes sense? It doesn't change. Within the relevant range, fixed cost stays the same. How about the variable cost within the relevant range? Well, we already know, more you're using it, more you have to pay. Less you're using it, less you have to pay. So what drives the variable cost? Variable cost, it will be equal to the number of the units that we're using times the cost per unit. Make sense?
Yeah, so far, yeah.
Okay, so then let's express that variable cost in the top formula. What we're gonna get? We're gonna get fixed cost plus, in brackets, number of the units time variable cost per unit. It's going to be equal to the total cost, correct?
Okay, that makes sense now. Thank
Right. So now it's clear, correct? So now let's see from this formula, what do we know from the information that we have and what we don't know. Now, we can work either with the highest point, either we can work with the lower point. Let's go with the highest point first. I'm going to mark this in yellow here. Let's use the highest point. On the highest point, what do we know? I know my total cost is equal to $9,800, correct? It's right here. I already know that my variable cost per unit is equal to what? $8. We already calculated. Make sense? What else I know? My usage, number of the units, or number of hours in this case, that I'm using it at the highest point is 800, correct? Are you with me, people?
Yeah.
Okay,
you. Yeah.
so let's put it in the formula. Which formula? This formula. So total cost is $9,800. That should be equal to what? Fixed cost. This is the one that I don't know, correct? Plus, in brackets, what I'm going to have? I'm going to have number of units, 800 times $8 per unit. So that means 9,800 should be equal to my fixed cost plus, when I open the brackets, what I'm going to have? 6,400, correct? 8 times 8 is 64, 2 more zeros, 6,800 or 400. So, can I express my fixed cost? Fixed cost should be equal to how much? 3,400, correct?
Yeah.
Based on this logic, the fixed cost should be equal to 3,400. Now, let's move. That's if we use the high point. Let's use the low point and see what we're gonna get if we're using the low point. Let me format this first. I don't need this. That's the high point. Let's use the same thing, but for the low point, and see how much we're gonna get for the fixed cost using the low point. Obviously, I'm gonna flip this in green, so you can see that this one is actually related to the low point, and that will be the low point here. On the low point, the total cost is equal to 7,400. Variable cost per unit stays the same, $8. My number of units are 500. Applying the same formula, so what I have to change? I have to change this number. That's not 8,000, that's 7,400. It should be equal to the fixed cost times 500 units times 8, correct? So the 7,400 should be equal to fixed cost plus what I'm getting here. Something like a 4,000. You're getting 4,000 here? 5 times 8, 40. 2 more zeros, 4,000, correct? So the fixed cost is also 3,400. So I perfectly know that through the high and low level, high and low point, I can calculate the fixed cost. Once I get the fixed cost, That's what I need. So right now, can I put it in the formula? I can. So now I can I predict the future now?
I think
What?
so.
Yes, you think so, right? So let's put it in the formula now. Now what we're gonna have? The total cost, it will be equal to what? To the $3,400 plus number of the units time cost per unit, which you already see is $8. So next month, when the manager comes and asks us, hey, what will be my cost for the month of July? What we're gonna say? We have to ask him only one question. How many hours you planning to work? If you tell me how many hours you're planning to work, then I can give you approximately how much your total cost will be. That's why we're doing this whole exercise. We to be able to predict the cost and come up with the equation that's going to help us to predict the cost. Let's go now over the slides. Just going to stop sharing. Let's go back to the slides and repeat the same thing one more time. Again, you have this chart with the high low. Next thing that you have to do is to identify which one is the highest point, which one is the lowest point. Highest point is the month of June with cost 9,800. Lowest point is month of February with $7,400. Don't forget, we're chasing the highest and lowest point of the usage, not of the cost. And based on the usage, we're using the cost for that month, for that usage. Getting the differences, cost, usage. Cost is always nominator, usage is denominator. Come up with the cost per usage. In this case, cost per hour. Once we get the cost per hour, it doesn't matter which level we're going to use. Are we going to use the high level? Or are we going to use the low level? Under the both level, we're going to get the same result, $3,400. Once we get that total fixed cost, we can come up with the cost equation for that activity. Total cost will be equal to 3,400 fixed cost plus $8 for variable cost per unit hour times the number of hours. Once you tell me the number of hours, I can tell you the total cost. Let's do this simple example here. Let's pretend that the sales salaries and commissions for the month are $10,000 when 80,000 units are sold, and $14,000 when the 120 units are sold. Now we have to use the high and low method. What's the variable portion of the sales salaries and commission? What do we have to do? We're going to get this 14,000. First, the highest point is 120. The lowest point here, we have only 2 points, 80,000. That's the highest low. First, we're going to get the cost associated with the high level, 14,000, minus the cost of the lower point, 10,000. Difference is 4,000, correct? 4,000 will be our nominator. Denominator, 120 minus 80,000. And we get 40,000 as a denominator. 4,000 divided by 40,000, it should give us the answer, correct? In this case,
Quick
will be
question.
yes.
Quick question. Where did the 40,000 come from in the denominator?
The 40,000.
Yeah.
40,000 is related to the level of activity. 120 minus 80,000,
Oh, okay, thank you.
right? The cost is always your nominator. The usage is your denominator. Getting the highest cost minus the lowest cost, you're getting your nominator. Highest usage minus the lowest usage, your denominator. 4,000 divided by 40,000, you should naturally get answer B. That's how you're getting the 10 cents per unit. Now the salaries and commissions are the same. Now using the high and low method, what's the fixed portion of the sales? Salaries and commission. Let's make that additional step to get the fixed cost. Now you already know that it doesn't matter which level you're going to use. The highest or the lowest level, you're always going to get the same result. So use one of them. Randomly use one of them and see what you get.
Hello?
Yep. I'm waiting for you. I want you to do this calculation. So again, use the either highest, either the lowest point.
A.
You already know the cost per unit. Now calculate the fixed cost. How much will be the fixed cost? The formula should look something like a 10,000 will be equal to the fixed cost, which is a question mark, time usage of the lowest level, since I'm using 80,000 time 10 cents per usage. So 10 minus 8 is going to be 2,000. On the other hand, will be 14,000 equal to 120 times 10 cents per unit. Naturally, it's going to come 14 minus 12, 2,000. So the answer should be 2,000. Here, which point they're using, high point or the lowest point for the calculation here?
Highest point.
High point, yes. What you're going to get when you use the low point? Same. There's no
We'll get the same.
difference, right? Now, one thing that the only problem with this method seems very easy, seems very practical, seems very interesting. The only problem is don't try to apply this formula to any other level of activity. It's not going to work. This formula is accurate and can be applied only to the highest or the lowest point. If you apply the formula in April, you're not going to get this result. If you apply the formula in May, you're not going to get this result. So don't do it. Only the highest point and lowest point. That's it. And then use it for prediction. Next method is the last square regression method. Very interesting method. A lot of calculations using an Excel spreadsheet with different conditions. Not part of this course. So you don't have to worry about it. The last thing that I want to tell you today is the income statement and income statement format. In order to do that, I'm going to flip again to the Excel spreadsheet. And I'm going to show you something on the Excel spreadsheet very quickly. The two different formats of the income statement. I want you to see them because next time we're going to build on this. Let me share my screen. Here we go. So there are two. One is called traditional income statement. The other one is called contribution income statement. What's the difference? Let's go first with similarity. Both statements start with the same point, sales. Both statements finish with the same point, operating income. Since both statements are based on the historical data, which already happened in the company, both statements is going to have the same sales as a dollar amount, same operating income as a dollar amount. What will be different? How are we going to see the costs? In the traditional income statement, we have cost of goods sold, then we have gross margin, then we're going to have operating expenses, and after that, we're going to have this operating income. That will be our first calculation here, gross margin, second calculation, operating income, or operating expenses, sorry, and the last one is our operating income, and we're done. I can get this format now, paste it here, and what will be different in the contribution income statement then? Let's put some numbers here. Gross margin, let's put it $40. Then our cost of goods sold $40. Gross margin will be 100 minus 40. And then we have operating expenses 50, and that will be gross margin minus the operating expenses 10. And we're done. On the other side, we're gonna pull, now what we're gonna do, we're gonna get the cost of goods sold and operating expenses. We're gonna look at those two costs very closely, and we're gonna divide it based on how the costs behave. Our options are only two. Either it's gonna be variable, either it's gonna be fixed. If it's variable, the only thing that's gonna drive the variable cost is the level of sales. More we're selling, more cost. What we're selling? We're selling the products. So what drives the variable cost? The products. We're gonna say variable cost based on the products sold. Let's say our variable cost is 60. That's gonna give us now contribution margin. That's how we're gonna call it. Now, in this case, contribution margin will be 100 minus 60, that's $40. And then we're gonna have fixed cost. And fixed cost is 30. Our operating income, as you can see, is exactly the same. Why do we need this contribution margin? Obviously, we're gonna need it next chapter. Next time I'm gonna focus a lot on that contribution margin format, and we're gonna come up with very interesting findings here. But for the management purposes, we need this contribution income statement, so we can make management decisions on our operations, which are gonna affect later the financial statement, which are prepared on the traditional income statement for the outside users. Let's move back to the slides and complete those slides for today. So again, the traditional format income statement is organized by function. And we don't consider the cost and look at the cost as a fixed variable. Where in the contribution format, we're focusing only how the cost behave as a variable or fixed cost. Again, total sales are total sales. We cannot change anything. And we cannot change the operating income. The only thing that we can change is pull out all the costs, see how they behave, categorize them between variable and fixed, put it back in the statement, prepare the contribution format statement. Why do we need that contribution formal statement? Again, for decision making, for management decision purposes, first. Second, how are we going to use it? We're going to use it next time in chapter 4 for the cost volume profit analysis. We're going to use it in chapter 9 for the budgeting. Then in chapter 11, we're going to do some segment reporting. And chapter 12, we're going to use it for the decision making. Traditional approach again, sales is organized by function, contribution format organized by behavior. Sales, cost of goods sold, gross margin, operating expenses, operating income. Contribution format, sales, less variable cost, contribution margin, less fixed cost, operating income. Traditional, used by the external user, contribution approach, management. That's how you should remember it. Every time when you see contribution margin, management. Gross margin, outside people. And that concludes your chapter 2.